Harlan, what's going on? You were saying you gotta sell your peanuts
Uh,
while the circus is in town. Is the circus in town here?
well, it depends, what you're trading. I mean, you see these stocks gap up like this, and, it's true. I mean, they always get sold off. Look at Twitter. Twitter got sold off, all this stuff. Whenever they pop like that, um, you know, in a short period of time, you got to smoke them when you got them.
We got to give
So,
Harlan a lot of props here, Dennis. I mean, he wasn't with us when they hit that pre-market low at 18.90 and a quarter. We had him on a little bit later in the week.
he was,
Yeah,
yeah,
you talked us both off the cliff,
yeah. We were
Harlan.
I
both
did
getting
excellent.
bearish, and you said you gotta hold that 1900 level. You've gotta hold it, and if you hold it, we're still bullish. And the cash did hold it. The futures did not, because overnight we got down to 1890. But the cash held it, and then the markets rallied since then. So it was a great call by you on that 1900. We bounced, and we've bounced hard off of it.
Well, there's another thing. It's you look at support, and that's how I can remember saying that. You know what? Throw all that emotional stuff out the door. Just wear support. Wear support. And I tried to keep hammering that home that day. But it also brings up a really interesting situation as well. We talked about it's always darkest just before the dawn, and it was pretty dark out there. But, support, when you trade what you see, you always want to know where support is. So that's what you want to try to keep you from getting emotional from that standpoint. And you know what? It's all about emotional extremes. I can tell you, I've seen it happen so much. When people are at emotional extremes, that's about the time that you're also tagging a support level. The flip side is when everybody is pie in the sky, that's about the time that you're hitting a resistance level. So they do kind of go hand in hand. Fear and greed goes hand in hand with support and resistance. So when you combine the two, it's not a bad way to look at things. So, but it's all about where we're going from here. I mean, can you really say we're going to head back up and retest the highs? I don't know. I just know that you got some resistance up at that. What about 1936 zone?
You're going
On the
cash as the
S&P?
base. Yeah, Harlan, I wanted to go into this with you as well. I mean, when the markets like are at extreme levels, like extreme highs, it's kind of hard. It's always tempting to try and pick a top. We hit at that 1985.75, just flirted with that area. Then we came down. To me, the market's really at an interesting point. I like to use the futures. The 50% retracement comes in of this entire move at the 1937 and a half, 1938 level. I didn't hit it on the way up yesterday. Caught it a little bit on the way down. Got a little bit out of it. But to me, that is a key level. It marks a 50% retracement. I'm looking that because you were talking about how's the market going to react on a rebound. And we had a big 50-point rebound in two trading sessions. It looks like we're getting a little bit of a stall here. What are you looking at to say, okay, that was the retracement of the rally. Boom, it's over. We're going back down. You do a projection from 1941. That takes you to 1841.
Well, it all depends on where you're drawing those, what highs and what lows, and what time frame and frequency you're working in to draw those Fibonacci retracements. I'm looking at it, the last 15-minute chart, maybe 20, 30 days. Yeah, I guess you could say on the cash. 1947 was the 50% that I have on my chart.
On the cash. Right.
Plus you came up and retested that 1942, 43 peak from what is that, August 4th, 5th. So that was a resistance zone as well. So you at least got an initial reaction off of it. I can't say we're done to the upside in the short term here. We could easily come back and test that 1945 zone. If it tests it, it stalls, starts to roll over in a micro time frequency. Well, that could be a double top right in there off of the 1905 lows or 1904 lows. So, but you are starting to claw up into some overhead supply when you start to look at it, So I don't know. I mean, at my point, I want to see what this pullback does. Could we stage an ABC up and that's it? For me, you came right off that I'm going to call it 1990, right down to 1900. And, when you get that big of a move in a short period of time, you're going to get a digestion or consolidation of those gains on the short side. And the way that happens is twofold. They either digest sideways through time, or they pull back off their lows like we've just done via price. So it's going to be, we're at an interesting juncture here. If this whole piece in here, call it 1900, 1945, waffles up in here and continues to build out what could be a bear channel building, then I'm going to get extremely cautious. In addition to that, I guess, I might as well add this part. Market leaders. Let's talk about market leaders. What exactly is a market leader? Well, a market leader is a stock that leads the market. We all like hearing, it's a market leader when the market's in an uptrend. Well, that's all great. Well, just remember, market leader goes both ways. And the biggest sector theme that led this market from March, is a lot of those energy stocks. And a lot of those names, they have all broken big picture uptrends. So remember, lead means both directions. I have an old saying, when the market leaders start to roll over, the market isn't far behind. You start looking at some of these energy stocks, and they're not looking good, and they're the leadership. You look at NOV, nice, huge uptrend, actually since April and May, it got slammed to the 50, and it's putting in a bear channel here. You look at NFX, Nancy Frank X-Way, same thing. You look at EOG, same thing. You look at ATHL, same thing. CXO, same thing. Let me give you some more here.
So there's some weakness in the energy sector there, Harlan, but isn't it always the fact, like this whole bull market's been driven by rotation? And when they're buying some or when they're selling something, they seem to not rotate out of stocks altogether, but they seem to rotate into another sector. And I ran a scan here this morning and just looked at a few stocks that were making new all-time highs. And we were just starting to talk about, like we looked at Brick B is making a new all-time high. So some of your value stocks might be coming back into favor. House of Mouse Disney made a new all-time high there yesterday. Home Depot made a new all-time high yesterday. Even an old school one like Xerox, XRX, made a new all-time high yesterday. So isn't it a little bit that, this market's still rotating? So isn't that a good sign?
It is. And, that's one way they keep the drive alive. We'll kill this theme, and while we're doing that, we'll rotate into this theme so that you keep the drive alive.
Right.
And, that becomes the phrase, it's a market of stocks. So from that perspective, I totally agree with you, just totally. So if it is going to be a market of stocks, there are areas that because money does generally stay in the market. It just looks for a home at times. I see nothing with those energy stocks that would make me want to buy that leadership. So maybe that whole sector and theme does go into a correction, only to be replaced because if energy makes up 20% of the S&P, all right, so 20% of the S&P is going to be out of favor. So who are we going to move? What theme are we going to move to offset the weakness in that theme? That's the way I'm kind of thinking with what you just said. And, and there's a lot of truth to what you just said, because you're right. We've seen it. The market went into a correction starting in March, April, and May. And you know what? The energy stocks picked up the reins and took off, and that obviously quelled the downside in the S&P during that period of time. And we went and saw the S&P go, basically sideways versus the NASDAQ and the Russell. So, there's a lot of merit to what you say. So I'm in total agreement there. That doesn't mean that we can't come back down and chew around in here either, though. But for right now, major support is 1900. If you come back there and you kiss 1900, because remember, these are the dog days of summer, low volume, things tend to get amplified in both directions when you have low volume. It's the trading box trading against themselves. So,
could you take a look at H&R Block, the Herb chart here? Had a pullback, gave you a lot of time to get in at the Looks like the $32 level. Now you've had 4 or 5 up days. To me, it's running into a little bit of resistance, Harlan. But can we get your take on H&R Block, Herb, that bought the former
Well,
oldie company that used to trade for oldie discount?
well, I'll tell you what. This is a classic. I mean, this issue came up. It spiked up back in June. And of course, after the spike, they tend to do what? Digest that gain by pulling back off their highs. And that's exactly what this name did. It pulled back off its highs down to the 50-day, broke the 50-day, the 32-ish level a little bit, shake people up, which is a good thing. And usually after you shake out the weak hands, in the sense of, it's breaking the 50-day, I got to go, that's about the time that they tend to run you. So one could say they popped some stops from anyone who had a stop at 32. But since that time, you can see it crossed over about 4 or 5 days ago, crossed over to the upside of that pullback off its high. So I got nothing bad to say about it. But, except it's already 5 days late. The ultimate low risk entry is when it crossed over. That's where you want to be. Twitter. You guys are talking about Twitter today. What's that doing in pre-market?
It's unbelievable right now. It's now up $1 almost. So it actually just was up $1. It's up 90 cents here right now. We were talking, I was looking at this and thinking this is kind of a Harlan chart where it's pulled back off those highs significantly. If you think about the 52 high that it set pre or after hours after their earnings report, it's significantly off that, but it's been kind of rounding here. I know how you like your rounding bottom. Well, today this is in blast off mode and this thing's up 90 cents here right now.
It is. So we're talking 44 and change here. So it is on my watch list. It was on my watch list this weekend. I added it because it is. It's a pullback off highs. I heard Joel earlier. It just doesn't seem like it's going to fill the gap. If I'm not mistaken, is what I heard him say.
Correct.
And you're right. It just doesn't seem that way. It's had every opportunity to fill the gap last week, yet it didn't. It's been a very orderly pullback from that big gap up on its earnings. And that's another thing. When you see stocks that are pulling back in an orderly manner, that's good. That's corrective versus impulsive. Impulsive is obviously, Chicken Little, the sky is falling, I'm out of here. All right, that type of mentality. But this is a very corrective pullback, so it could go. Where's resistance now? If indeed it does go, well, a retest of that gap highs. Where's support? 42.5. So there you go. You just framed support and resistance in the short term over the last 2 weeks. That's all you need to know. So, if you buy it here and it takes off and heads up to 47, 48, hey, great, nice return. But if you buy it here and it fails, set your stop on any break below 42 because then you could fill that gap.
Right.
So it's a real simple, here's support, here's resistance, that's all you need to know. If support breaks, you stop out. Goes to resistance, you know what? Lock your gains or at least some of them. It's just a simple trade.
I was looking at it yesterday that it had all those closes in the $43 hand. I believe it had 5 or 6 in there, and then you had 4 or 5 lows under 43 in the $42 area. So to me, that kind of signifies like an institution or some big buyers that saying, okay, we missed we weren't in before earnings. Here's the pullback and here's the area. But Harlan, I want to do a little education here because you've mentioned this a couple times, and it's called the bear channel. And could you give us one of those stocks that you said it's in a bear channel, and then just give us your textbook definition of it so we can learn a little bit here on Benzinga's pre-market prep brought to you by Options House.
Awesome. All right, let's do that. Wells Fargo, WFC.
Okay.
Take a look at Wells Fargo. I think we talked about it last week.
I think we did.
But why don't you pull a chart on it? And I know we got a little bit of a delay here.
Okay.
5 seconds.
And at least with the screen. So, a bear channel is typically when an issue pulls back and then it claws its way higher in like a little fort. There it is. Stay on that chart.
Okay.
Right there. See I'm going to call it July 20th. The stock sold off since the beginning of July, and then July 20th, it hit a low, and then you can see it kind of clawed its way up to just over 52. start drawing your support lines. This is what we call a classic pullback off lows. Hits a low and it pulls back off those lows. So, it's really, if you invert this chart right here that you have on the screen right now, guess what? It's a pullback off highs. So what's the opposite of a pullback off highs? A pullback off lows, short sell. So you draw your channel lines, and you can see that big candle day to the downside, the big red one, that was your entry. Which, to me, when you start seeing things like this, I start to go, all right, this is what I'm looking for. I know what I need to see to make me take a trade. Now let's look at Nancy Frank X-ray.
Okay. Are you are you now long-term bearish Wells Fargo based on this information?
No. I mean, Wells Fargo, it doesn't have a lot of scale to it. It's not going to be one of these Teslas that puts on 30, 40, 50 points. It's just not that kind of stock.
Right.
So, I like growth. I like growth stocks because I believe that if you're going to put your money in the market, you're putting your money at risk. And if you're putting your money at risk, you need to be paid for that risk. So I'm always looking for where's my biggest bang for the buck. And see what it's doing? It looks just like that. Since it hit that low first of the month, it's been just kind of slowly but surely clawing its way up here. So, how long is it going to build out? That's the key. You just don't know how long these things are going to build out and whether they're going to be more of a complex build out. I say that because it could be an ABC pattern within the channel, but there's an issue. Now go pull a 6 month on it.
Okay, we'll go weekly. How about a weekly? How's that look to you, Harlan?
Sure. Yeah, you'll get 1 or 2 bars. Sure.
Okay.
He's just chugging it.
Yeah. Just trying to bounce, not an impressive bounce at all. I mean, I have to give credit to J.C. Peretz, who we had on a couple months ago, and he was talking about the later stage of a bull market when you have like the energy sector, and that was something that he was keying on. And surely the energy stocks did keep going higher, and then they've kind of rolled over, and that kind of, along with the geopolitical events, have kind of brought the market off the highs. We got a couple more issues to have you look at before we let you go. BTU, could you take a look at that for us? Boy,
BTU.
Tom, Uncle, yeah.
Yeah, Peabody Energy. Boy, that used to be a screamer way back. I'm looking at a 6 month chart, and I can see back in June exactly what we were just talking about. It hit a peak in May, got slammed, did a pullback off lows, bear channel, and that was it. So, it's all about patterns, chart pattern recognition. And you can see, well, you're looking at February, you can see that piece from February 24-ish. Boom, it pulled back off its lows, and it broke that bear channel to the downside, and bam. Now, it just seems really wide, really loose, really sloppy.
Okay, and one
at
more,
least for me.
One more for here. FENG. I'm not sure if that's a
ADR, and it's down here in the pre-market too.
Yeah,
it closed 11.20. It's offered down at 10.50 right now, trading at 10.50. So obviously some bad news here out of FENG.
This is a tough one for you, Harlan, but we're going to throw it out at you. It's trading 10.50 in the pre-market. I guess for me, it's cutting through that support there.
Earnings last night too, so it's changed so much from the chart from yesterday. Now we're offered at 10.50 here. Bad earnings reports. So you got a fundamental catalyst here that's driving it back down. And we always say technicals take a back seat when fundamentals are at play. And we were digesting an earnings report here, so hard to trade a technical.
Well, I could look at it the last 2 days and say, it's one of these buy the rumor into earnings and sell the news. You can also see yesterday's high of the day was also at a resistance zone going all the way back to April. So you knew, so here you're coming into earnings with a stock that's at resistance and just made a, 2 day spike from 10.5 to 11 3/8. So buy the rumor, sell the news. But I'm looking at it now and I'm going, that whole period between April and current day, it's just pretty wide and loose and sloppy. If it can tighten up for a week or two, put in a pullback off highs here, and then surge forward, sure, then I'd want to take a look at it. But, again, trade what you see, and you got to know what you want to see, what you need to see to make you take a trade.
Okay,
So,
Harlan
and
Pyan.
for me, it's all about pullback off highs on the long side.
Harlan Pyan, co-founder of All About Trends, giving us his take on the markets. Very good as usual, Harlan. We'll talk to you. Well, they'll talk to you next week, and have a good trading day. We're just going to take
You bet.